Now, can anyone really understand all the moving parts at General Electric? Charles Ortel can, of Newport Value Partners, and he's been dogged in trying to explain how GE's debt mountain could hurt the company. He, as I said, managing director at Newport Value Partners. Charles, good to have you with us. Thanks for coming in. I appreciate you spending the time focused on what's going on at GE. You are dogged about it. First, though, explain kind of what is GE today?
Okay, Pim, thanks for having me on. GE is really two different collections of businesses. Most investors are drawn to GE thinking that they're investing in an industrial company that makes locomotives and jet engines and products that where it truly does have a leading market position globally and where it's operated around the world for many, many decades. The truth is that the more important driver, in our view, to the financial results of the consolidated entity is the troubled financial services business, which since September 30th of last year has actually lost money at a pre-tax level. And we think that is a very dangerous result in an environment where interest rates have been kept low by government action, where capital has been made available to this and many other companies. Somehow, using their accounting, they've reported a pre-tax loss in their principal finance business, General Electric Capital Corporation.
Okay, so we've got these two big pieces. That makes up GE. How do those pieces interact with each other?
Well, GE Capital is a subsidiary of the holding company, and it is the principal borrower. When General Electric needs to scare up cash, debt, it uses GE Capital, and that entity has borrowed since December 31st, 2005. It has borrowed $367 billion. Now, to put that number in perspective, the total external debt of Brazil is about 160, and of India is about, I think, 260 from memory, and I believe China is a little bit more than that 367. But it's a massive pile of debt. That's how they access the debt markets, and they sell paper to the public under a theory that there is a strong guarantee of this troubled financial entity operating to protect investors. And so we, when we got into this 2 years ago, we asked ourselves, what are the financial statements of this strong parent? And when we looked at their financial statements that management chooses to present, we couldn't find a balance sheet for the guarantor. So we constructed one from their public statements. And when you do that, what you discover is that the guarantor is extremely weak. It has negative net working capital. It has negative tangible common equity. It is not an entity that you would think could really, truly backstop this troubled financial services company.
So the idea that investors have that the locomotive business, the jet engine business is somehow going to save the financial services business, according to your work, not true.
Absolutely not true. In our view, we have gone to the trouble of actually tying our work precisely to the balance sheets and cash flow statements that GE provides. And our work foots to the penny. And what it shows is actually that the GE Capital operation generated positive net cash flow by simply borrowing more money than its negative cash flows. So, I've never heard of a company that investors value highly that has negative cash flows and says, hey, our great result is we just borrowed more money to cover it over. On the industrial side, if you burden the other business with the cost of their massive dividend program and their suspended share buyback program, that business had negative cash flow too. So the total amount of debt on this business, all told, by their reckoning on June 30th, was $510 billion. And it rests, that giant elephant, rests on only $10 billion of tangible common equity, which is an extraordinarily high ratio in this environment.
I'm going to ask you a last question, though. Would GE survive without the government support programs that are in place in your mind?
In our opinion, no. Our opinion is that on September 30th, by September 30th, GE was in a very troubled position. Obviously, the world was under threat. But when you go back using 20/20 hindsight and you look at, how much money GE tapped through the TLGP, I think it was on the order of $70 billion. Had they not had access to that, and had they not been able to convince Warren Buffett and retail to put equity in, I don't think they would have made it.
All right. We're going to have to follow this story closely. I want to thank you for doing all this work and appreciate you giving us your insight. Charles Ortel of Newport Value Partners, once again, digging into the details of General Electric. Thank you.
Thank you.